Okay, now it's okay now. Maybe you were seeing something or whatever. So yes, okay. So fuck me. Okay, so let's just start from the beginning. I think I suppose. Okay, so let's start from the beginning. So okay, I was speaking alone. Awesome. So Fibonacci tool and my experience. Okay, so this is the first disclaimer. This it's not. It's just my opinion, just my experience. I'm doing good, but you need to study and you do it on your own opinion. Okay, so Fibonacci tool is based, as you know, it's a tool on trading that is based on the Fibonacci sequence. That is after the sum up of a number and the preceding. Okay, so we've got the 1 1 2 2 plus 1 is 3 3 plus 1 is 5 8 13 21 etc etc. Okay, and then we've got the other basic, that is the golden ratio. Okay, that is the result from dividing one number by the following one, excluding the first one, and you obtain the 0.618 ratio that you found everywhere in the nature. Okay, it's very curious. If we go to the first slide, you can see examples or where the golden ratio you found in the nature in different places. So if you are interested, if you are curious, find an internet, because I think it's very very interesting. Okay, so the tool I'm going to review mostly is the Fibonacci retracement. Please, if you have any questions, ask me in the chat, because I am looking now and then, and I'm very pleased to answer your questions. So the Fibonacci retracement is based on when some trend ends. I don't care if it's a bull trend or a bear trend, it should retrace to some levels. And Fibonacci levels are used by market agents. So when a trend stops, there's a retracement on the other direction, and you should go to the Fibonacci levels, because the buyers and the sellers are going to go to the Fibonacci levels. Okay, the Fibonacci levels, classic Fibonacci, are 0.236, 0.382, 0.5, 0.618, that is the golden ratio, and 0.786. This can be written as a percentage on the settings of the tool, and are levels of retracement related to calculations inside the Fibonacci sequence, except the 0.5. This is only the half of the trend. But for example, 0.236 and 0.382 are the result from dividing a number from the second following and the third following, and 0.786 is the square, the square of the 0.618. Okay, this tool is related, mostly the traders relate to the Elliott wave theory that I'm not going to review, and the support and resistance levels that we review in the past in another live. Okay, so how I use the Fibo level. Yes, some conspiracy between the live and fucking YouTube, but we are here now. So how I use the Fibonacci tool. So you need to draw the tool from the valley or the bottom to the top or peak of a trend. In this case, if it's bull, or if it's bear, from the top to the valley, and look for the Fibonacci levels. Okay, you need to understand 0.5 is the most frequently used, and it is said that when the trend retraces to the golden ratio and the 0.786, the resuming trend is strong. So if we got a bull trend and the retracement of this bull trend goes to the golden ratio, for example, the resuming trend, the new bull trend after that retracement is pretty strong. And the other levels, the 0.2 and the 0.3, the resuming trend is weak. It's very easy to understand and it's very logical because it's related to parabolic movements and the trend lines. If only retraces to the 0.236, the trend line that results from this trend is very steep, and you know that if a trend line is very steep, it's very weak. And the same with when some parabolic movement happens, a strong reversal is due to. So, and it's related also with a very short retracement. So, on the other hand, a golden ratio retracement, the trend line that results is not steep, so it's strong, and there's no parabolic movement. Okay, so it's logical to think about this, the strong of the trend related to the Fibonacci levels. Okay, and me, I use it as a confluence of support and resistance, price action, and volume. I use it barely related to Elliott wave. I mean, I like the Elliott wave theory, but if you use the Elliott wave as the base of your trades, it's pretty dangerous, and probably you are going to lose money. Okay, so but this is my opinion. If you like the Elliott wave, you can trade it by the Elliott wave. Okay, and the other tool that probably you see on TradingView is the Fibonacci extension. When Fibonacci extension calculates the peak or the top or the valley, the peak or top of the next up or the valley, the next valley of the bear market. Okay, and it's used the golden ratio, the 0.786, the 1 and 1-to-1 extension, and the 1.618. That is the golden ratio extension. But you can use the Fibonacci retracement tool for everything. Okay, you can skip the extension, but I use extension sometimes as a confluence. And an example is, for example, this is the chart of the gold USD monthly, I think. I draw the Fibonacci from the 681 to the 1920, and you can see how the price stops in a lot of times in the Fibonacci levels. Okay, you can see how it's not exactly, but it's pretty accurate. Okay, so this was an example of a Fibonacci retracement, but we can go to a real example on the Bitcoin chart. Okay, so let's switch to the Bitcoin chart, and I insist on that you have any question, please share with me on the chat, because I'm very pleased to answer the questions you have. So remember, I use the index of BTC USD till at least on the monthly and the weekly. Okay, so for example, applying the Fibonacci retracement, if I want to know this up till where it's going to retrace, I pick my Fibonacci retracement. You can pick the star to the favorites and draw it from the valley to the peak, and we've got the different Fibonacci level. Let me switch to the weekly. That is it's clearer. Okay, and we can see that the price is going to stop at the Fibo levels. We've got this one, we've got the 0.5, we've got again the 0.3, and we've got again the 0.618. Okay, so left, this is another Fibonacci level that we need to know if the price continues going down. Okay, the same on the other side, but we need to draw upside down if we want to know this peak from this valley. Where is the retracement? When you can see that the price stop at the open 236, then stop it at this 0.5, here again, and pretty beautiful, as you can see. Okay, So if you think this retracement is not over, you can think about this and these levels again. Okay? And for example, if you think that this down is over and it's going to retrace again, we draw from the top because we want to know the retracement to the valley, and we can see the price is stopped here, but we've got the 0.3, the 0.5, and so on. Okay? And for example, if you think that this down is over, you are going to go to the most frequently used Fibonacci, that is the 0.5. So for example, this was my next level just speaking about Fibonacci that I'm going to look, that is 0.5. Okay, but as a good reversal, as a good stopper, but price is going to stop in every Fibonacci. Okay, so if you are only using Fibonacci, with this is enough. Okay, the other thing that I wanted to show you is the Fibonacci extension. Okay, for example, if the same as this one, if you think this down is over and the price is going to reverse and going up, breaking this triangle, you use the Fibonacci extension using the 3 points, the valley, the top, and the next valley, and you look for the Fibo levels. As you can see, you can more or less use the same level than if you draw your Fibo from before. Okay, you've got the golden ratio here, you got the 0.680 here, and the next levels. Okay, 0.18. You can use both. I prefer you to use only the Fibonacci retracement. In this case, if I think that the price is going to break the triangle, I'm going to look for this area, and that area. Okay, so for me, with the Fibonacci retracement tool is enough. That the next one you need to know is, I'm not only using this, I am going to look for the support and resistance. For example, if I am looking for the next wave, okay, to here, so I am going to see the 0.5, for example. If you can hear, I'm going to look for the price action. So for me, 0.5, 0.6 is okay. Why? Because there's a lot of traffic here of price, and if you go for the volume, you've got here big volume, you've got here big volume. So for me, this is a pretty strong area, even this with big volume. Okay, if you remember, when I did a video about BTC analysis projecting the price from here to this area, I told you that 8K is going to it was going to be very difficult to beat, but if it was beaten, 9K is going to be very easy. Why? Because the support resistance levels here, there's traffic, but if we go to the volume, we can see the volume is low here, we can see the volume is low here, we can see that here there's no price action, and we can come here and the volume also is lower. So for me, 9K is not a strong resistance for BTC. So after beating 8K, I think we are going directly to 10K, or maybe a little stop, but going directly to 10K. Why? Because the volume and support and resistance is as important or more important than the 9K. That's why I thought that 8K is going to be very difficult, and that's why I short there and I take profits. Why? Because we've got big volume here, we've got some volume here, but the good one was the volume here. Okay, there was pretty big volume here. So now with this volume, we are not going to beat the 8K. Maybe next time. Okay. So this is basic, but this is clear from Fibonacci tool. Okay, so I think I said I'm looking that there's no question, so let's do the BTC analysis, BTC USD analysis. So let's start from monthly. This morning I made analysis, and there's a video on YouTube, okay, but we are doing again. We've got the monthly chart that is pretty strong now, because it's supporting for the third month of the 21 EMA. There's no bowling yet to consider as a beating of this channel, but candlestick formation looks like also almost a morning star. Okay, so it could be enough to beat the channel this month. Okay, we go to the ADXDI, clearly it's trending bullish, and if we go to the MACD, little retracement, little crossover, but it's still on the bullish side. Same for the RSI, that is support here, then support here, and probably is going to this resistance level or 59, and stock is mostly neutral. Okay, we switch to the 15 days that I like a lot. For the big picture, you can see that this 144 EMA is still following the triangle, that the 55 EMA is sustaining the price for the same month, almost 3 months, and 21 EMA is acting as a resistance right now. So volume is bigger than this retracement, so this looking good, ends in 5 days, so could be good for a reversal formation and going and breaking the channel. And then the same stochastic is oversold, so this is good for bulls. RSI is the same as monthly, okay, going between supports and resistance, and MACD is same as monthly, but as you can see, histogram is decreasing, so this retracement maybe is over and is crossing again bullish. Okay, ADXDI losing strength, but pretty away from the end of the trend. Okay, so this look good for the bulls. We switch to the weekly. Let's do the same. 55 and 21 acting as a resistance. Lower volume, but not bad, better than the bear volume. So maybe needs to go sideways before breaking the channel. Okay, MACD is going to the bear side, but histogram is decreasing, so going to zero. So bear strength is, bears are weak right now. Remember here we've got the bullish divergence, if you remember, with the stochastic. So this is good for bulls on the weekly, and ADXDI is crossing, but is not trendy. Okay, so good setup for bulls, but still it's too early to say. We are going to switch to the BitMEX now. We are going to 5-day to continue. We've got here the 5 days. We've got a clear channel and very good candle with big volume. So and ends tomorrow. Today ends. So ending like this could be very good in order to break this channel. Okay, I like this volume candle for bulls. You know, I told that as a pretty strong setup, so good signs for bulls. And I'm sorry, and RSI going up, but now is facing some kind of resistance over here. Okay, maybe needs to rest a little bit. ADX is no strength, so looks for sideways, so maybe it's too early to break the channel and price goes sideways over here before breaking the channel. Okay, but I like a lot this volume candle. MACD bear ending, cross, an alarm for bears. If I were bear from here on the 5-day, I will close. I would have closed the trade over here, but now, of course, now is too to start to be bullish of the 5-day. And the 3-day chart, we get good, very strong rejection candle. This is not looking good. Okay, this is not looking good. This is seems that wants a down over here. So we start to do our Fibonacci levels. We stop at the 0.382. So maybe we should start to think about this area. Okay, this area is our support. Okay, very big volume, big rejection. It's not going to go up now. It's going to rest over here, even testing the lower supports. Okay, MACD is on the bear side, but it's growing, and with this volume probably this is going to slow down, and the RSI is getting to the resistance level, so careful, and even can draw some kind of bearish divergence. 3-day almost approaching to the overbought level, and ADXDI there's no strength, so careful bulls on this 3-day chart. It's not looking that it's going to break now the channel. Okay, we switch to the daily. We left this Fibonacci, we use this trend line over here, but we know we've got, for example, this one. This is kind of trend line, or this one. Okay, so first of all this one. Okay, so we've got the big reaction candle, big candle down. This is good, but this is not strong enough to think that the next trend is going to be breaking this channel. Okay, so we think the same. This is crossing, but histogram is decreasing, so there's no strength. ADXDI, there's no trend here, and stochastic on the overbought and going down. So the same at 5-day, and this is not good. I think this is a clear higher high, and this is a clear lower high. So this is a strong bearish divergence. So bulls needs to go back and think and restart over a Fibo level here. Okay, let's switch to the 12-hour. So the same here, strong engulfing. Now there's a reaction candle on the daily. ADXDI is good for trend, but no, it's not going to be enough to beat. So maybe it's going to test, but it's going then down, and the MACD still on the bull side, but histogram is decreasing. So at least it needs to rest over here, if not testing again, but not breaking the channel. Okay, so let's do better our levels. So we've got the volume, big volume here. We've got over here. No, this I think is over here. Over here. And we've got big over here. And this, I like this one. This one. So seems pretty clear that the area is going to be more here than this low. So maybe 7,200 is strong enough to stop the down. Okay. Okay, let's continue to the 4 hours. And we are not adding anything. We've got now this retracement tool here. 0.5, it's okay, but it's probable that price is going to go to that level, to the 8,200, as we said. Why? Because there's a good up now on the 4 hour. Look at this volume, and this reaction is not stronger than enough to stop. So maybe it's good to stop first here, and doing something like this, I don't know, but something like this, and then reaction, and maybe then testing this, something like this. I don't know, but this is what is in my plan. Okay, so this candle is so strong, so I'm not thinking about a lower low now. Maybe over that level, that green level, it's enough. If we go the Fibo, okay, the same, there's confluence. So this is the area for me to think about a long and see what happens next. And then if price can't beat this, the short is pretty clear. Okay. I don't think we need to go to the lower levels. I think it's good enough like this. Here is the other on the other side. You can see this was a big rejection. So I don't know. I need to look, but seems pretty strong this area now to try another high. Okay, we broke this trend line, so maybe we need a 1 2 3 going over here or going to the higher Fibonacci, or at least a double top over here. Okay, so this is what I think about BTC USD. If you have questions, please, is the moment to ask, because if not, I'm going to explain some BitMEX basics. Okay, for example, I want to comment this possibility. Okay, we've got this probable head and shoulders. Okay, why? Because we've got high volume, but look at this reaction. This is not as good as this one, and not as good as this one. So this could be a possibility, and if we project this up to this level, we go to the more or less the trend line. Okay, so for me this is a possibility right now, because this up, the volume is not as high as the previous one. Okay, it's not as solid as I thought, but it's something to think, or at least a lower high with lower volume. Okay, so if you don't have any questions, I can see that there's no comment on the chat. I'm doing so quickly the BitMEX basics. Then if you have any doubt, please go to the send me a message on private and I can solve your questions. Okay, but it's pretty easy. So this is another account mine. Okay, but I don't have money here because it's another account I made, and this is what you need to understand. Okay, this is the place order, your position, and the contract details. Okay, so your position, you've got your contracts that you want, the row, but you need to see the leverage. Okay, you've got the 1x, 2x, 3x, 5x, 10x, 25, and please never use this. Okay, cross is when you use all your margin or your account to margin. Okay, please don't use the cross. I don't like. Use whatever you like, but I like, I like a lot. The 25x is pretty risky, but for me it's pretty good to use in Bitcoin because it's pretty volatile, and I can take as you can see, I can take a lot of profit over here. Okay, that means that you multiply your position 25 times. Okay, and that means that if the price moves 4% against you, you are going to be liquidated. Okay, but if the price moves 4% to your side, you're going to double your money that you used to the trade. Okay, so please pay attention what is the button here. Okay, and place order, I explained that on another video. You've got the quantity of contracts. Okay, you've got your limit price. For example, there's here 3,000. Okay, you can use whatever you like. Okay, and the price and limit price. notice that you have here limit, market, stop market. Okay, and you got here stop limit, trailing, take profit limit, take profit market. Limit orders is related to the maker fees. This is because you make, it's not a maker, but you supply the market, because you put an order. If you long, that is you buy, if you think that the price is going up, your limit order is going to be below the price, and you are adding more money to the market, so you are a maker, so BitMEX pays you. If you put the price of a limit above the price, you are buying someone's Bitcoin, so you are taking money. You pay the taker fee, and you pay the taker fee of your whole position. So usually it means 1.8% of your position if you are doing 25x. When you close, if you close the same way, another time BitMEX fees you 1.8%. So you at the end you lose almost 4% of your money. So please use the limit. Let the price goes to you, and don't chase the price. Okay. The same if you use market, you buy the market, you take the money, so you are going to pay. Okay. So the next orders are the take profits, limit and market. Limit and market is the same that I explained. Did you, for example, put a long position and you want to exit at $50 above, you put your take profit limit, and when the price needs to arrive over here to sell, okay, and BitMEX pays you the fee. If you close your position because the price is going against you, the moment you close the position, the take profit order disappears. Okay, so it's not the same that putting a limit order. For example, if I put an order at 7,930 and then the price goes down and I enter, I can put a limit order at 7,000 and sell order at that level, and when the price arrives, short, not short, close the position. Okay, but if price goes against me and I got liquidated, for example, or my stop loss triggers, this order is not going to disappear. So if the price goes up, I'm going to short automatically. That's why take profit limit exists, because it's related to your limit order. If you got liquidated on your limit, your take profit limit is going to disappear. So if the price goes up again, you are not going to enter a position. Take profit, the same quantity. Limit price is the price you want to sell, and the trigger is the price since you, for example, if you want to close it, oh my god, at this level, you for example can put that when price arrives to 70, the order appears. If the price is not reaching this price, this level is not going, your order is not going to appear. Okay. If you use the market, you only need to put what price wants your order to be closed. Okay. The stop market is the classic stop limit. If you enter a long position at this level, if for example you want to get out, if price goes below 7,900, you put your stop market and you put your, for example, at 899. When the price arrives this area, your position is closed automatically with a market order. Okay. If you use the stop limit, it's going to be difficult, because if you are oh my god, if you are longing now at this area, then you can think, okay, I think the price is going to bounce, and it's going to bounce at 7,900. But for example, I can put a trigger price here, and then I put a price at 11. So for example, what I mean is that if price goes down, my order is going to appear, but it's going to appear above that level. So price come back and closes, and BitMEX pays you, and you don't pay BitMEX. This is quite dangerous. Stop orders is better if you want to go and you don't want to be on the computer. It's better to use the stop market. And if you are going in the computer, you can close manually, or you can use the stop limit. But the stop limit is pretty dangerous. Okay, and trailing stop is that the more the price goes up, the more your stop goes up. It's kind of taking profit insurance. Okay, you can put your how many USD want the difference. For example, you buy at 23, and then price goes over $50, and you say, okay, I want to trail this with $50. Okay, so the price is below $50, is going to close. Okay, I'll that order. Then this is for longing. Shorting is the other side of the market. Okay, for example, I want to short because I think it's going down, so I put my order at 30. Okay, because I think the price is going to go over there and then it's going down, so then I put the short. What I do is I am borrow some Bitcoin, then in the future I need to buy again. But my thinking is that in the future the Bitcoin is going to be cheaper. So if I borrow the Bitcoin, then it's easy, and I sell it, then I'm going with the same money, I'm going to buy more Bitcoins, and I'm going to return the part, and I'm going to keep the part of the difference. Okay, so I short that at that level, and then I exit the same using taking profit, using limit order, and I put the price below the order. Okay, it's pretty easy. And then you've got here different pairs you've got. Okay, I never use the hidden because it's always the taker fee, and this is mostly the basics of this. Here you have the positions. Okay, close position at these orders, everything, your stops, your active orders that doesn't finish, position closed. Okay, so this is the basics of the BitMEX. But the most important is what I explained the other day, is the fees and the meaning of the leverage and the meaning of the limit orders and everything. Then the BitMEX basics is pretty easy to understand. Okay, so it's all in this rectangle. Even you can close this because this is, you can see the volume, whatever. And then you need to know that every 8 hours BitMEX fees you because you're lending, borrowing money. Okay, so your positions, as the longer they are, the more funding you need to pay. Okay, I hope you like this. If you have more questions or doubts about BitMEX or whatever, please, you can ask me on the Telegram, or what do you like, because I am seeing that there's no questions. So for me it's enough. Bitcoin is looking nice to me. I'm being profitable, and I'm going to wait too long when I see some bullish setup. Okay, so thanks to be here. I'm sorry again for the technical problems, but I don't know what happened with the live and with YouTube. But hope you enjoy it, and see you on Telegram, and have a nice weekend, and bye.